activity ratios. So the activity ratios assess the relationship between the working capital and our gross sales. So the activity ratios have the inventory turnover ratio, the receivables turnover ratio, the payables turnover ratio, and the working capital turnover ratio. Let's start with the inventory turnover. The inventory turnover measures how inventory is managed and whether we have the business sales and purchasing departments are in sync, meaning we replenish the business replenishes their purchases so that it could supply again for another round on so that it would be converted again into sales. So they don't run out of supplies, and for every sale they got, they have an already supply that could be converted again into sale. So how would we compute for this? So we the cost of goods sold in a period divided by the average inventory or the ending inventory if the beginning inventory is not available. So average inventory, that means inventory beginning plus inventory ending divided by 2. So cost of goods sold, we identify the cost of goods sold and the ending inventory and the beginning inventory if that is given. If the beginning inventory is not given, we just use the ending inventory. So for example, in the trial balance for enterprises 5.0, step 1, we compute for the average inventory. So we would use the value of the merchandise ending here, merchandise inventory, the 25,000. So that's yun lang kailangan natin. So 25,000 only, and that is the ending inventory. Then we identify the cost of goods sold. We have 33,844. After that, we divide the cost of goods sold to the value, to the average inventory, or to the ending inventory. So cost of goods sold is 33,844 divided by 25,000. We have an inventory turnover of 1.35. Do you follow? Tama ba yung naging sagot?
Yes po.
Yes
Yes
po.
po.
Okay. So we could interpret the inventory turnover as a low turnover or high turnover. If we have a high inventory turnover, that means the company sale is good and there is a demand for our product. So lagi tayo nagre-replenish ng ating mga products, and the inventory is being converted into sales. Nagiging sale yung inventory natin. However, if it is low, that means it's either there's no demand or there is a declining demand, which results into weaker sales. So let's try solving for this. So in this case, we have the inventory beginning and inventory ending. That means we need to get their average first. So 55,400 plus 49,850 divided by 2, we have 52,625. Then we use the cost of goods sold, 68,325 divided by the inventory, 52,625. We have an inventory turnover of 1.30. So the process for this, if the inventory beginning and ending is given, we first get the average inventory. We get the average inventory by adding the inventory beginning and inventory ending. Then we divide them by 2. After that, we divide the average inventory to the cost of goods sold, and we get now 1.30. So is the process, if the inventory beginning and ending is provided, clear?
Yes po.
Yes po.
Okay, try solving for the second set.
1.40 po.
Okay,
1.4.
1.40 is correct. Let's proceed to the second one. We have the receivables turnover, or how efficient we are at collecting the debt that we are owed. So this for this particular the receivables turnover, we need the accounts need to specify whether or not the sale is a cash sale or if it's a credit sale. We also need to separate the credit sales returns and allowances, as well as the credit sales discount to the cash ones. Because since we are dealing with just the receivables turnover, gaano kabilis natin nakukuha yung mga may utang sa atin. So we need the accounts here, the net credit sales. Please take note that we need the net credit sales. Hindi natin pwedeng isama yung cash sales. And kung available ang net credit sales returns and allowances and credit sales discount, kailangan nating ibawas yun para makuha natin yung net credit sales. If hindi given yung net credit sales returns and allowances and sales discount, then gagamitin lang natin yung gross para sa formula. So ulitin natin, to get the net credit sales, we need to deduct the sales returns and allowances and sales discount of the sales of the credit sales that we have. And then we need to get the average accounts receivable. So average the beginning and the ending. So to get the average, the beginning balance of the accounts receivable and the ending balance of accounts receivable divided by 2, and that is your average accounts receivable. So in this case, we have the gross credit sales of 545,000, and we have the beginning accounts receivable balance of 250,000, and ending is 185,000. So 250,000 plus 185,000 divided by 2 is 217,500. So 545,000 divided by 217,500 is equal to 2.51, and that is our receivables turnover. Okay, so we interpret the receivables turnover as having a high receivables turnover rate and a low receivables turnover rate. If we have a low RTR, low receivables turnover rate, it means we have an inefficient collection. If we have a high receivables turnover rate, that means we have low RTR is inefficient and high RTR is efficient. So how would we know if we have an inefficient collection or an efficient collection? Usually, it's also the same with the next one, with the payables turnover, which is increasing or decreasing. You cannot fully appreciate the value of the receivables turnover if it's just given to you on a singular data na ito yung receivables turnover natin for this particular period. Kailangan natin meron tayong point of reference. So if you will compare that to a previous year, to the previous, succeeding years, and we see that this year we have a low RTR, that means hindi natin nakuha, we don't have that much efficiency in collecting the debts. But if it is increasing, and we see the rate that we have right now as we are having an efficient collection, then the data would speak for itself. So ang andito natin, ang important detail with the receivables turnover as well as the payables turnover is that it has to be compared with other data from other periods, so that we could see if we have a better collection or better payment methods right now. Okay, so let's try solving this one. So please be reminded na kailangan natin kuhain yung average first of the receivables before using it as a divisor for the gross credit sales.
3.67 po ba, sir? 68.
Okay, 3.67, 3.68. How about this one?
2.70. 2.69.
Okay, 2.70, 2.69, we'll accept those. So we proceed with the payables turnover. If receivables turnover measured how fast we collect the debt that are owed to us, then the payables turnover would measure the speed at which we pay the companies whom we owe. So the involved accounts in here is the net credit purchases. That means the credit purchases, the purchases, returns, and allowances, and the purchase discounts. So please remember that with the same principle as the receivables turnover, it's important that the purchases, returns, and allowances and the purchases discounts are just related to the credit purchases. So, and then we need our average accounts payable. So we need the beginning of accounts payable and the ending accounts payable. Then we have to add those two and divide them by 2 so that we would get the value of our average accounts payable. So let's put that into the problem. So our first step is to compute for the gross credit purchases. So purchases minus any returns and allowances. Kung hindi given ang purchase returns and allowances and purchase discounts, then we're just going to use the purchases on account, that is the gross amount. Next, we get the average of our accounts payable. So we have the beginning January 2019, 150,000, and the December 2019 ending 225,000. So we divide them by 2 and we get 187,500. So 450,000, we perform the payables turnover. 450,000 divided by 187,500 is equal to 2.40. So we interpret the payables turnover same as we interpret the receivables turnover. We need previous data. If we see the receivables turnover, the payable turnover, I mean, as a lot is decreasing. If the payables turnover rate or the payables turnover rate is decreasing, that means we are taking longer time to pay for our obligations. And if it is increasing, that means we have shorter time to pay for obligations. So again, we could utilize the payable turnover rate to its full value as well as the receivables turnover rate if it is compared to other periods para makikita natin yung improvement, the improvement that those accounts and our payment and our collection methods, how they have worked, how they were being implemented. So kailangan natin yung previous data para ma-appreciate natin yung kung ano yung ginagawa natin, kung paano siya nagta-translate into the financial statements. So try computing for the payables turnover rate of this problem. Remember to get the average first before dividing.
1.25, sir.
Okay, sino nagsabi ng 2?
Ako po, 2.50 po.
2.50.
Okay, 2.50 is correct. So next problem,
1.84 po.
okay, good job. 1.84 is correct. So last one under the activity ratios is the working capital turnover. The working capital turnover measures measures the efficiency in which the working assets support sales. So we measure how much working capital is converted into sales. So we need the value of the working capital and the gross sales. So to get the value of the working capital, we need the current assets and the current liabilities. So kailangan mo natin kuhain yung difference ng current assets and current liabilities before using it as a divisor to the gross sales. Okay, so step 1, we identify the gross sales. How much is our gross sales in this case?
119,000, sir.
Okay, 119,000. Second step, we compute for the working capital. So identify the current assets. Right now, ano yung mga current assets natin na nandito?
Cash. Account
Mainly
receivable.
cash. What else?
Account receivable.
Accounts receivable. We also have prepaid rent and merchandise inventory. For our current assets, we have accounts payable and income tax payable. So now we compute for the working capital. So 212,000 plus 60,000 plus 15,000 plus 25,000 is 312,000 minus 14,844 and minus 15,447. We have a working capital of 281,709. So to get the working capital, we need all of the current assets and current liabilities, and we need to get the difference of the current assets and the current liabilities. So hiwalay natin silang ipag-add. Current assets minus current liabilities is equal to the working capital. Step 4, we divide the gross sales to the working capital. The gross sales that we have previously is 119,000. So 119,000 divided by 281,709, we have an equal to 0.42. So what does that working capital turnover of 0.42 means? So that means um, for every sale in the assets, 0.42 is being used. The working capital that's being used is 0.42. I mean, for every peso, for every peso that is involved in the working capital, we only generate 0.42 cents. So yung contribution ng working capital natin to the sales is 0.42 per dollar. So we interpret that as either high turnover ratio or low turnover ratio. So for the working capital, we have a specific numbers. We need it. A good working capital is 1.5 to 2. So that would be classified as the high turnover ratio. If we have a high turnover ratio in the working capital, that means that business is efficient in using the working assets to support sales. And if we have a low turnover ratio, that means we have too many accounts receivable or we have too many inventory. So if the working capital turnover rate is less than 1 which is the same case in here, 0.42, that means that we have problems with our liquidity. So it's possible na hindi natin ma-finance yung cost of production natin. So we established that a good working capital turnover ratio is the value of 1.5 to 2. And the low turnover ratio is less than 1. So kapag sabi nating higher than 2, kasi nga yung good turnover ratio lang natin is 1.5 to 2, that means that we don't have enough assets. Kasi mabilis mag-replenish yung working capital natin. If the working capital supports that much sales, that means it replenishes quickly, and therefore we need more financing for our working capital because our assets are not enough to supply for that amount of sales. So again, the ideal working capital is 1.5 to 2. A low turnover ratio, which is less than 1, would mean that we have problems with our liquidity and we cannot meet short-term obligations and we cannot meet the requirements of the cost of production. If we have a higher than 2 working capital, this is in theory, that means we need more assets. We need more assets to support the sales that we have. Because for that would mean that for every sale that we have for every value on the working capital, we would incur 2 or more twice its value in the sales. So kailangan nating masuportahan yun or we risk having also liquidity problems. Okay, so let's try solving for this unadjusted trial balance from marketing consulting service. Okay, so let's get first the value of our working capital para mas madali. So we get cash 24,550. Accounts payable or consulting fees receivable is 11,700, and we have the prepaid expenses. I already totaled them. That's 3,150 plus 150 plus 300. It's 36. So 39,850 for our current assets. For our current liabilities, we have 2,500 for the notes payable and income tax payable of 6,000. So 39,850 minus our current liabilities, which is 85, we have 31,350. Now use this to generate our working capital turnover rate. Okay, Libunaw, Leanne, 4.10 is correct. So to get the working capital turnover, kailangan muna nating kuhain yung value ng working capital. And we need to identify also the the sales account. So in this case, 4.10, this is a high turnover rate for our working capital. And this means for every peso in the working capital, it generates 4 times more. So ibig sabihin nito, kailangan natin ng additional liquidity. Additional working assets para ma-sustain natin yung sales natin or we could possibly increase it more. Are there questions with the activity ratios and this working capital turnover?
Sir, I have po. But yung meaning po, parang exact definition po ng working assets po.
I'm sorry?
Yung
What's the question?
yung parang pinaka-main purpose po ng working assets po or working turnover po.
What is the main purpose of the working assets or what is the purpose of the working working capital turnover rate?
Both po.
Okay. So the purpose of the working assets is the same as yung sa working capital natin. It is used to sustain the business. It is the lifeblood of the business. Yun doon nagsi-circulate. It circulates. It is the money that is circulating within the business para ma-sustain yung business operation. That is the main purpose of the working capital. See, we need the cash to sustain for the salaries. We have and all of this accounts receivable, prepaid expenses, merchandise, inventory, notes payable, they all revolve around cash because yun yung pinaka value ng working capital natin because we give allocation, same as with the progress report, the first progress report. I ask you to enumerate the expenses, the possible expenses that you're going to need for that specific period. Sabihin natin bago mag-replenish for the entire working capital period. So the working capital sustains the business. Diba, we have we have the short-term capital requirements and we have the fixed or the long-term capital requirements. Yung long-term capital requirements natin, these are your fixed assets. So sila yung mga equipment, yung land, so fixed yung cost nila. But the short-term assets, our working capital, it sustains the business. It's the lifeblood. So as per the purpose of the working capital turnover, it gives us the ratio at which the working capital is being translated into sales. So in this case, for example, in the working capital, we have 31,350. That means for every peso, for every cent, in that 31,350, we have that value works 4 times to generate to support the sales of 128,590.
I see po. Salamat po.